Hey guys, Crypto here with a new surprise video update. This one, I kind of just sporadically decided to record this the other day because I felt like this was a video worth making. There has been a lot of chatter lately about Ethereum. Is Ethereum dead? Has Ethereum failed as a chain? What is up with this lackluster price action that we've been seeing on Ethereum over the past months and frankly over the past couple of years? Before we jump into the charts, I do want to say that in the coming few months, I'm giving you guys all an opportunity, every single one of you that's watching this video right now, an opportunity to win free cash. It takes less than 5 minutes of your time to get entered to do this. So I'm going to go ahead and briefly explain how you guys can win this free cash. Also giving away MacBook Pros, MacBook Airs, and iPhone 16 and more. And every single one of you that's watching today, right now, can be eligible to win these with minimal effort, okay? I've done this type of giveaway in the past. I gave away $10,000 of cash plus a couple of other items. This time it's the biggest giveaway that I've ever done. We're giving away $20,000 in cash and prizes, and this includes multiple MacBook Pros. We're giving away 2 MacBook Pros, 2 MacBook Airs, an iPhone 16, and a number of other prizes, guys. All you have to do is sign up using my ref links to any of my 4 partner exchanges. I will also emphasize that while a couple of them do require KYC, a couple of them do not. And so even if you don't want to go through KYC, you still have options here to get entered to win. Every entry into any of my partners' exchanges is worth 1 entry into the giveaway. So even if you don't sign up for all 4 of my partners here and you just sign up for one of them, you're still entered to win. Obviously, if you sign up for all 4, you have greater odds of winning. We're going to be giving away $1,000 a week, essentially, for the next 3 months, okay, to someone who has signed up through these links. You can find this post with all the information, all the details on my Twitter. It is the pinned tweet. And if you click on that, you'll find all the information about how to join. 2 of my partner exchanges are centralized exchanges that do require KYC and have certain jurisdictional restrictions. My other 2 partners are actually decentralized exchanges, which don't require KYC and are more flexible in that sense. And you can sign up for one of them. You can sign up for all 4 of them, depending on what you're eligible to do. But if you just sign up and you deposit $110 into the exchange and you leave it there for the duration of the campaign, you're eligible to win $1,000 every week until the end of the campaign, which is in about 3 months. So I've gone ahead and posted the giveaway schedule on my Twitter, but long story short, for the first 8 weeks, every week we're giving away $1,000 plus a crypto tag Loki, which is like a metal card that you can use to stamp your seed phrase on for safekeeping. Weeks 9 through 12, we're still giving away $1,000 every week, but on top of that, we're giving away a curved monitor from Bybit, an iPhone 16 from Bybit as well, a MacBook Air from Mass.Money, one of my partners, a MacBook Pro from Woo, my other partner. And then on week 13, the last week of the campaign, we're going to be giving away $3,000, a crypto tag Loki, a Trezor wallet, a MacBook Pro, and a MacBook Air to one single winner. Everything about how to become eligible for this campaign and giveaway is on the pinned tweet on my Twitter. And again, I want to emphasize, guys, it does not take much to sign up. Every single one of you that's watching this should be able to be eligible through one exchange or another. I will also be posting the link in the video description here below in case you need help finding it. Guys, with that said, one more quick announcement before we jump into the charts. And this is just a quick shout out to my partners at WooFi Pro and WooX, guys. WooX obviously is a centralized exchange, but WooFi Pro is their decentralized perp exchange. So if you are feeling weary about keeping your funds on a centralized exchange, I do recommend checking out WooFi Pro. It is a completely decentralized exchange. You custody your own assets. You don't have to send them to a centralized exchange to utilize the protocol, and they do offer leverage perps just like a centralized exchange. Obviously, the biggest difference between a centralized exchange and a decentralized exchange is going to be liquidity. So for larger traders, myself, I still primarily use centralized exchanges like Woo and like Bybit. But if you're a smaller trader and you want to keep your funds with yourself when you're trading and not risk sending them to a centralized exchange, you can use a decentralized exchange, and liquidity should not be as big of an issue for you. That's about it for these announcements. And with that being said, guys, let's jump right into the charts. All right, guys, so we're going to start off with the Ethereum USD chart. After that, we're going to take a look at the Ethereum Bitcoin chart. And finally, we're going to take a look at one more pairing, which I think is pretty insightful in this case. And we're going to go over these 3 different charts, and I'm going to show you guys why I think a lot of you are sleeping on Ethereum here, okay? Before we jump in this particular chart, I kind of want to highlight the sentiment that we've been seeing on Twitter regarding Ethereum. I mean, we see this pretty much on any coin whenever it's been going through a prolonged period of downward price action or a prolonged bleed. But with Ethereum specifically, I've never seen it this bad. And this is the worst I've ever seen sentiment on Ethereum. We're getting tweets and threads on Ethereum talking about why it's dead, how it failed almost every other day right now. So let's go ahead and take a look at some of these tweets that we're seeing. All right, so here's one. Make no mistake, ETH as an investment is completely dead. A $225 billion market cap network that is seeing declines in transaction activity, user growth, and fees and revenues. There is no investment case here. As a network utility, yes. As an investment, absolutely not. And there have been, back and forths underneath this post that argue why this might be the wrong approach to looking at these metrics. But taking a look at just this image here, we have a transaction on the Ethereum network daily from 2016 to 2024. I mean, this looks pretty healthy to me, right? We're sitting here at daily transactions that are not necessarily at record highs, but Ethereum price is down as well. The markets are in a bit of a slump, right? For those that are aware, we've seen kind of a prolonged period of meme coin mania followed by a slump as everyone lost all their money on Pump.fun and all these meme coins. So there is a little bit of malaise in the market right now. And you can see here that while transactions aren't at all-time highs, daily transactions are pretty much holding steady at these elevated levels that they've been at since around 2021, 2022. So for the last couple of years, that doesn't look bad to me. Monthly transactions on Ethereum, again, looking solid to me. A number of active addresses looking pretty decent, holding up. So yeah, this doesn't look like a dead chain. This looks like maybe a stagnation in growth over the last couple of years. But that's something that we typically see when interest and momentum in the space is down. And obviously we know that over the last year or so, attention has primarily been focused on the Solana ecosystem, not on Ethereum. And so the fact that maybe Ethereum hasn't seen a ton of growth over the last couple of years doesn't really surprise me, especially with kind of stagnant or kind of ranging price action that we've been seeing. It doesn't surprise me at all. In any case, there is a theme here in crypto, which is that when the price of an asset is down, all of a sudden it is not a good investment, okay? Whether it has utility, whether it doesn't have utility. When the price is down, it's not a good investment. When the price is up, it's a fantastic investment. That's kind of the way that sentiment here on Twitter works. So anytime prices are depressed, all of a sudden it's a terrible asset, regardless of fundamentals. Anytime price is pumping, it's a fantastic one. And we can see this with coins like Solana or many of the meme coins that have pumped up to astronomical numbers and valuations when they were high. You kept hearing, people saying that you have to be delusional, you have to have conviction, you have to be a cult. Those are the assets that'll perform the best. And those are the assets that are the best investments. And then when the price is down, of course, reality sets in that they have absolutely no utility or function or purpose. And so now they're bad investments. But that is the same to be said for coins that actually have fundamental value, the ones that are actually building and actually doing things. When the prices are low, no one wants them. When the prices are pumping, everyone sees that they actually have utility and they now believe that they're great investments. Okay, here's another one. Time to build on Polkadot. Ethereum is dead for developers. Vitalik finally found the right path. Polkadot offers many advantages, tools for builders. So this is essentially someone pivoting to Polkadot because Ethereum is dead. So I think this image is not real. It looks like it's like an AI image, but trying to use this as a way to make his point that, there's another network that offers more than Ethereum. Here's another one. I've consistently predicted that Ethereum is dead. Why? Even Wall Street boomers can tell that Bitcoin is special, but Ethereum is not only one among thousands of altcoins, it's also one among thousands of smart contract platforms, and it's arguably the worst of them. Here's another one. Ethereum Bitcoin just dropped to a 5-year low. The trend has been down only, and it's hard to envision a clear catalyst anytime soon. Now, I would want to say that in this case, I don't think Miles is necessarily saying that Ethereum is dead. He is saying that the trend is down, which we know, on Ethereum Bitcoin, which we're aware of. And it has been down only. And we've been pretty bearish on Ethereum Bitcoin for the last 2 years, leading up to about the last few months. We'll go over that later on in this video. But when you see downward trending price action for a period of years like this, the general consensus is that, it's hard to see any reason why we would see a shift in such a downward move. We're going to talk about exactly why it makes sense to look for a shift here shortly. But that's just another example. Okay, here's another one. Ethereum, I keep saying to you since 4K, Ethereum is dead. 1350 to 1400 will come pretty fast. So we're already getting calls for, 13 to 1400 here. Meanwhile, we're sitting on what is arguably the most significant support. And we'll go into that here in a minute. So that kind of gives you guys an idea of some of the sentiment. I mean, you can go on Twitter and it hasn't just been over the last few days or weeks. It's been like this for a couple of months where essentially the consensus has been that Ethereum is dead. Why? Because we've been essentially ranging or we're kind of chopping around the same prices that we've been chopping around since 2021, right? And so the consensus is that, Solana went on a fantastic run, Bitcoin's gone on a fantastic run, Ethereum Bitcoin has simply been bleeding, and Ethereum has been going sideways/down, so therefore it is dead. Now we're going to take a look at kind of the other side of the page from a fundamental perspective very, very briefly, because my focus is typically on technical analysis here, but we're going to take a brief look at the fundamental idea, just a couple of brief ideas as to why this idea that Ethereum is dead is just so misconstrued, so wrong. When people look at price as a justification for fundamental value, you often get misled, right? Either you see a meme coin that's pumping sky high and think, wow, the fundamentals must be great, which is usually wrong because a lot of meme coins have no fundamentals. Or you see a coin like Ethereum that's been bleeding and that's sitting at low price, and you think, wow, the fundamentals must be terrible. Same can be said for coins like CRV. People think that because the price is down, the fundamentals must be terrible. When you actually look at the fundamentals, you realize that they may be fantastic even though the price is down. And so at this current stage in the market, price is not a good indicator of necessarily fundamental value. Price is an indicator of speculation primarily, and that's why we get these volatile swings up and down. Bitcoin currently trades at around $80,000 to $90,000 after seeing 4 to 5, 80 to 90% retracements in its history, right? So since its inception, we've seen literally 80 to 90% drops on Bitcoin. And today it trades at $80,000. So you can't always, and for the most part, you simply can't use price as an indicator of fundamental value on these coins. You actually need to look at the fundamentals and make sense of them and understand if price is a true reflection of fundamentals. Often it's not, or if price isn't. And then that allows you to see opportunities when they present themselves and potentially get a really good deal on some of these coins. So in any case, guys, let's take a look at the other side of the spectrum. This is a tweet from Small Cap Scientists. Ethereum stable and DeFi TVLs are higher than the next 20 blockchains combined. Nearly half of those 20 are also layer 2s built on Ethereum. If you think Ethereum is dead, it might be time to pack it up and get a real job. DeFi is built on Ethereum. And the point here is very, very valid. We're seeing lately a resurgence of interest in stablecoins, right? Stablecoin growth is off the charts right now, right? In this tweet, we can see that the total stablecoin market cap has grown by almost 5 billion in the last 7 days and more than 8 billion in the last 30 days, okay? Most of these stables that we're seeing that are entering the space are on Ethereum. That's the chain of choice right now for stablecoins. And so stablecoins being essentially, I would say, the hottest narrative in the space right now, and for good reason. That is focused specifically on Ethereum. And this is also one reason why I like Curve so much, because again, Curve is the deepest liquidity hub for stablecoins on Ethereum and on many other chains. And so people that are using stablecoins, when they're swapping between stablecoins, Curve is the best place to make those swaps. You get the best bang for your buck with the best exchange rate and generally lowest fees. And so the narrative right now is focused on stablecoins. Where are these stablecoins growing and increasing on? Ethereum. And so to say that Ethereum is dead simply because the price is down clearly doesn't match with what we're seeing here on the fundamental perspective. Okay, with that being said, guys, we're going to now focus on the TA, the technical analysis. Now, you guys who've been following me for some time know that this is primarily what I focus on. For any of my long-term spot holds, I do take fundamentals into account, but when I'm actively trading, fundamentals don't play a role. It's simply a trade based on technical analysis. So we're going to go ahead and take a look at the technical analysis. We're going to take a look at the Ethereum USD pairing, the Ethereum Bitcoin pairing, and then a final pairing, 3 pairings we're going to take a look at to kind of paint this picture from a technical perspective as to why people are not bullish enough here on Ethereum. Okay, before we get into this particular chart, I'm going to play a 30-second clip from my last YouTube video to kind of pick up where we left off on Ethereum, and then we'll jump into the chart today. So these are just different areas, different levels of interest. Some are higher time frames, some are lower time frame. As always, higher time frame levels carry more weight. And there's another way that you can view this as well. Like, you just look at these candle closes on this 4 monthly time frame, or you can call it the quarterly. You can just put a line here, and I can tell you that this level here, specifically at 1864.79, is a very significant high time frame level. Why? Because we had a quarterly candle that broke above it. We then tested it as support here. It held. Then we broke below it. It then acted as resistance for essentially 8 months. Finally, we broke through, and now it hasn't yet been back tested on the higher time frame. So actually, a tap or a wick into 1864, into this level here, would be an incredible level to bid. I would bid it blindly, and I would put a stop loss below 1535, for example, targeting new all-time highs, which looks something like this, right? I mean, this is like a simple blind bid if we get it. Now, either you're going to get filled on this or not, but if you get filled on it, that's an 8.7R trade, and it's a very simple, easy level to bid just by looking at the higher time frames, right? Now, there's no guarantees we get it, but if we get it, what a fantastic trade opportunity. All right, guys, so that was one of my YouTube videos. It wasn't the most recent one, it was the one prior to that. And in the most recent one, we had basically tagged that same exact level at 1864-ish, and you can see the price reactions off of it. It kind of held this support here in the lower time frames. We pushed up, we broke down below, and now we're trading slightly back above, right? And so this exact level that I was referring to in that video. And if I go ahead and zoom out to the 4 monthly chart real quick, you can see the interactions that we had with price here on the 4 monthly chart. Again, like I mentioned in that video, very, very clean interactions. We can also go to the 3 monthly chart, and you can see another level here right here that you can say is, it doesn't have as many touch points. So when I say touch points, I mean like levels at which we have interactions with candle closes or candle opens or wicks. I'm going to go ahead and make this one, we'll make it orange just to differentiate between the two. Okay, so we have these two kind of high time frame levels. Now, if I go back down to the lower time frames, basically the point is that these levels on the high time frame, okay, once they are flipped from what they were as prior resistance, which we can actually zoom out here and see, prior resistance, 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 once they're flipped, they should then act as support, okay? And again, as I mentioned in the last video, and you'll see here as well, with these higher time frame levels, intra candle, or I should say like between the higher time frames, we're allowed to break above or break below them on the lower time frames. What matters in this case is that the candle closes are below these levels. The point is that intra-month, you're left with these wicks. Low time frame moves that we saw give us these wicks above these levels, but the higher time frames end up closing below. And so what you can get then are these kind of like small little fake outs above and below this level in the lower time frames, which is why if you're looking at a high time frame level, you have to keep it in mind on the high time frame, which means wicks above or below these levels when they're acting as resistance or support are typically going to be fake outs, right? Occasionally we get the breakdowns, and that's when these levels flip. So what was initially resistance here on the lower time frames, you can see the rejections. When we finally broke through, they became support. On the lower time frames, you can again see the rejections, failed to break through, went back up. Broke down, now this should act as resistance in the lower time frames. You can see resistance, resistance, resistance. Broke through now should act as support in the lower time frames. Support, support. And so the default assumption here, when we are retesting these levels, is that they will hold. Occasionally they get broken down from. But the default assumption is that we're going to get some sort of a fake out like we saw in the past. So with that being said, the trade idea that I shared in that video is still totally valid. I actually went in and entered a long on Ethereum here at around 1900-ish. I think we're about at my entry right now. And even when we drop back below to around 1800, people were asking, are you still in the trade? Are you still in the trade? And this is why it's so important to focus on time frames, right? This trade idea that I took is a high time frame trade based on the idea that we are retesting a multi-month area of support. In the intra-month or within these intra 3 to 4 month candles, we may get wicks below that key level or those key levels, but that is not an invalidation, right? Because we know that we can get these lower time frame movements above these levels, and we can get these lower time frame movements below these levels, and that doesn't change the higher time frame perspective unless we get a higher time frame close below these levels. And so invalidation is this low here because this is a local area of demand that preceded this breakout to the upside. Within this larger area, you can call these two key levels of support. Slightly underneath those is a local area of demand. So this area of demand should catch price on the way down, and that should push it back up to keep us above these higher time frame levels. And if we can do that, then we expect to move back to the upside. So from a technical perspective on the USD chart, this is fine, right? We're pretty close to my entry. We're seeing attempts to break down from these key areas of support, but they're being held so far. And on the lower time frames, we have this local area of demand, which is kind of a more focal point for a potential reversal if we tap into it. We've kind of tapped into it once, but I'm viewing this lower time frame price action as kind of like a mini range. And so I would like to see this low taken before a full-on reversal ideally. So ideally we get something like this where we consolidate a bit more, we come down to take this low, and then we reverse, and then we flip this area into support and we continue up. Okay, so this is kind of what I'm looking for in terms of price action. I do think that we should sweep these lows here into this local area of demand. Then I'm looking for a break in market structure to the upside. Then once we do that, this area should act as support, or even this little bleed that leads us down to these lows. Once we break above it aggressively, it becomes its own area of demand. So what you can view that as is you can view this as a new area of demand or support, kind of like this zone that we have here. And again, the way that we identify those is we look at the downward movement before the breakout, okay? So again, if we get this downward movement before a breakout to the upside that breaks market structure in these lower time frames, then this downward movement becomes an area of demand. And so then at that point, once we get that, even if we go up to these range highs and then we start pulling back, a pullback into this zone should be bought, or we should see buyers step in, and then we should see continuation to the upside. So that would be a setup that you can take if you want to wait for more confirmation. I went in a bit aggressively, but if you want to wait for more confirmation for a higher risk reward trade and also a higher confidence trade, you want to wait for a sweep of these lows, a reclaim, a break in market structure, and then you want to bid the new established demand. That's my approach to something like this if you don't want to bid blindly the way that I did. In any case, guys, the Ethereum USD pairing is essentially at probably the most significant level on high time frames, and retesting a very significant support level on the chart, probably the most significant support level in these 4 years of consolidation, right? Because it's the level that acted as support and resistance multiple times on multiple candle closes throughout this 4-year period of consolidation, okay? We're now retesting it from above. It's the most logical place to see a reversal from. On top of that, you can view this in another way, and I covered this in the last video, but you can again view this as kind of the focal area of this consolidation that lasted for 2, 4, 6, 8 months, nearly a year, that we broke out from, right? So we broke out of this 8-month consolidation to the upside. And so this is where buyers are expected to step back in on a revisit or a retest of this region, right? You can focus this zone on this little candle here before the acceleration, and you can see that it lines up with our high time frame level, and it lines up with our local area of demand underneath, which I'm going to go back down to the 1 day so you can see it a little bit more clearly. You can see how the smaller area of demand fits right in with the higher area of demand. So we're getting a lot of confluence here from tons of different perspectives as to why this area should mark our bottom here, okay? Now, all this is to say that something like this, holding these levels, is only possible if Bitcoin doesn't nuke, right? If Bitcoin drops $10,000 tomorrow, Ethereum's probably not going to hold the green zone, right? However, this, again, in context of where Bitcoin's at, is totally fine, because where Bitcoin's at, if those of you following my updates, Bitcoin is also at a key area of support right now. And as I've said in many prior updates, I do believe that Bitcoin is forming a bottom somewhere between high time frame demand here and our supply zone up here at around 94 to 100K. So if Bitcoin is going to continue to range within this region, that allows Ethereum to potentially bottom in that region as well. Now, I've shown on lower time frames why I think that Bitcoin is potentially going to make a triple tap here, meaning it's going to hold a higher low, possibly above 76K, and then push back up. And if 76K is lost, then we enter high time frame demand, which is, again, as I've said in prior videos, the most likely place for reversal. But you can see that the downside from these levels is around 15%. It's decent, but it's not too crazy, right? I think that that's okay, especially if we hold 76 and push up. By the time we complete that, Ethereum should be a lot higher. And then even if we do get a pullback back down to the 72K zone, Ethereum should be able to handle that type of drawdown because it should be a lot higher than it is today. So as long as Bitcoin chops within this smaller range for some time, it allows Ethereum to move up off of this high time frame support that we're at. I'm not too concerned about Ethereum not being able to hold that level. Essentially, if Bitcoin were to lose high time frame demand, right, and we get some sort of a bigger pullback, I don't think it's going to happen at all. But if that were to happen, then don't expect Ethereum to hold the levels that it's at. The entire market would probably pull back in that case. But this video isn't to focus on Bitcoin, so I'm not going to spend too much time on it. Again, if you watch my last video updates, you'll understand why I'm quite bullish on Bitcoin here. And I've made the argument as to why a break below high time frame demand is unlikely, and why we're either probably going to reverse with a triple tap here, or we're probably going to reverse in high time frame demand. Those are my primary expectations right now. And so in that context, Ethereum is in a very, very good spot, okay? So that was, again, the Ethereum USD pairing. But now we're going to take a look at some of the other confluent factors. Now, Ethereum USD pairing already looks fantastic, and I already showed you guys why it looks fantastic in terms of risk to reward. But we're going to take a look at a couple of other charts with regards to Ethereum, and this is going to kind of solidify this idea or this thesis from a few different perspectives. So now let's go ahead and take a look at the Ethereum Bitcoin chart. So here is the Ethereum Bitcoin chart. And this is why I wanted to make this video, because we are at such a key level here. And it's really important to zoom out so you can really understand where we're at in the big picture, because a lot of people are seeing this multi-year bleed, and this is what's making them think that Ethereum is dead. This multi-year bleed is what's making them get freaked out, essentially. And now this is why you're seeing calls for Ethereum being dead, Ethereum going to new all-time lows or whatever it may be, sub $1,000, all kinds of crazy stuff. But when we zoom out here, we can see that all we're doing here and all that we have done is we have returned to these macro range lows. Okay, we had a massive range, and I've been talking about this range for literally 3 years now. I made a Twitter post when we were at this blue square here at 0.08 Ethereum, and I talked about why we're likely to see drawdown. And at the time, the area of interest was this zone here. I talked about why we're likely to see a drawdown to that zone there, a 56% drop to the downside. At the time, people said I was crazy. At the time, no one believed me. People were very skeptical, and they said there's no way that's going to happen because Ethereum is the best tech in the world, right? Ethereum is going to overtake Bitcoin and all kinds of crazy stuff, and that's because Ethereum price was high at the time. But anyways, we went ahead and over the next 2 years bled down to that area of interest. In that chart as well, I mentioned that this is the initial area of interest, the minimum target, so to speak, but range lows is always possible, right? And range lows is ideally what we look for in what we'd like to call a triple tap, okay? So we have now hit those range lows. So this is not a place to be turning bearish on Ethereum. This is a place where risk to reward is probably the best on the Ethereum Bitcoin chart, okay? Now on top of this, despite the fact that we're at the most logical place to be, looking for a reversal or to start looking for bullish signs, most people are incredibly and increasingly bearish on Ethereum here. So again, this is when kind of understanding technical analysis is kind of like a superpower, because you can see things that others aren't seeing, or you can anticipate things that others may not anticipate, because you're able to interpret and understand what's happening here on these higher time frame macro charts. If we go to Ethereum on the 3-day, I also want to point out that what you have here on the Ethereum Bitcoin pairing for the first time in a long time is a bullish divergence, okay? Not yet confirmed, and the confirmation would be essentially breaking above these local highs here. But bullish divergence is essentially when you get price making lower lows. So you can see here price making lower lows, but RSI not making lower lows, RSI making higher lows. And this is specific to when RSI is in oversold territory. So when RSI is trading, you can say below 30 RSI. When RSI is below 30 and you get price making a lower low, but RSI making a higher low, it's called a bullish divergence. That means that sell momentum here is waning, because while price is making a lower low, RSI, which is an indicator of momentum, is failing to make a lower low. So momentum to the downside is stalling here, where at macro range lows, at essentially macro range lows of a 8-year range. And so that's exactly what we want to see here on the lower timeframes into these macro range lows. Again, you can see the divergence here, the bullish divergence on the 3-day. If we get bullish divergences on higher timeframes like this weekly, it's always a bit of a stronger sign, and we like to see that. But there's no requirement per se, and there's no guarantees we're going to get them. So just to offer you guys some perspective, you can see back here in 2019, we never had a bullish divergence here on the weekly time frame on RSI, but that dip down to around 24 RSI marked our bottom, and then we reversed and went to the upside. So a bullish divergence isn't a requirement per se for reversal, but it's a good sign that we may start looking for one, that we may expect to see one. You can see here, again, this is back in 2019, once again, price make a lower low, right? And you had RSI make a higher low. These points have to correspond, obviously, to the price levels that we're looking at. So this low corresponds to this RSI point, this low corresponds to this RSI point. So you can see here back in 2019, when we put in our bottom then, it was marked with a 3-day bullish divergence on RSI. And so once again, we're seeing the same thing here, a 3-day bullish divergence on RSI into our macro range lows. So we're seeing what we want to see for potential reversal. On top of this, on the Ethereum Bitcoin chart, we know that Ethereum itself is sitting at massive high time frame support, the most likely place for a reversal. So this is additional confluence in the idea that we may see a reversal on Ethereum USD soon, because not only is Ethereum USD in the perfect spot for reversal, but Ethereum Bitcoin is also in the perfect spot for reversal, and it's showing clear signs of waning momentum to the downside at this specific perfect spot, perfect point for reversal. So the Ethereum Bitcoin pairing is supporting this idea very, very well. And again, those who are saying Ethereum Bitcoin is bearish for 2 years, why are you bullish? Guys, I was bearish for Ethereum Bitcoin for 2 years. I was one of the only bears on Ethereum Bitcoin for literally 2 years, for a 50+% drawdown. And I specifically said when we hit this zone that it is time to start watching for a potential reversal, right? We can go as low as the range lows. It doesn't really change anything. But now, after a 50% drawdown from the highs, 58%, 59%, it's finally time to start paying attention to a potential reversal 2 years later. So I had not been bullish on Ethereum Bitcoin all this time, but I am bullish on it here after, successfully anticipating a 60% drawdown on the pairing. At some point, the tides are going to shift, and I think they're shifting now. In any case, guys, this is the Ethereum Bitcoin pairing. The final chart that I want to show you guys that I think kind of nails this idea home is a unique chart that probably many of you have not considered. Well, those who follow me probably have considered it because I've been sharing it, but for most, this isn't something that they would normally look at. But I think it offers some really great insight, and that is the XRP Ethereum pairing chart. Let's take a look at that. This is the XRP Ethereum chart. And once again, I have tweeted many times about how bullish I am on XRP. We tweeted about this when XRP was trading at 30 to 40 cents before it's run up to 250 plus, right? It did a 10x in like a couple of months, I believe. And I use this chart as an explanation as to why I'm so bullish on XRP on the high time frames, right? We caught a 250% move on this pairing. So yeah, we talked about this back when XRP Ethereum was trading at like 0.0002 down here. Since then, we've moved up on this pairing about 250%. We caught that entire move on XRP. And I always said that this was my first target, these local highs, which we've now hit, as you can see. And my second target is these highs up here. And that is a topic for another day because we're not focused on XRP on this video, we're focused on Ethereum. But what I did say in my tweets was that now that we've hit the first target after a 250% rally to the upside, it would not surprise me for us to see a pullback. Pullbacks are natural, pullbacks are healthy, especially after a massive run like this. They're nothing to be concerned about. However, it's likely that we're going to get one. And the reason I said that is because we're at logical resistance now at these range highs. We've now tagged our first target. There will be some profit taking or some shifting of XRP into Ethereum at these levels. Makes sense to do so. But also, we can look at RSI here. In the same way that we had bullish divergences on Ethereum Bitcoin, we have bearish divergences on XRP Ethereum. And the reason why this is relevant is because XRP, unlike a lot of coins in the space right now, has seen a massive rise over the last few months and has held on to that rise, right? So XRP went from 49 cents to $3.41. That is a 7x, and it's generally held on to those gains, right? It's currently settled at around $2.15. But XRP has been, without a doubt, and no one can really argue against this because its proof is in the pudding, like XRP has been one of the strongest crypto assets since November in terms of ROI, right? In terms of gains. And so XRP, and I've previously talked about this in other videos, XRP, in my opinion, is clearly a market leader here. And we are consolidating and we are correcting right now after hitting a high of $3.40. And I've said many times that, in my opinion, this consolidation, this correction, is simply a pause before the next massive leg to the upside. But it is a pause nonetheless, and it is a correction nonetheless, and I don't think it's done yet. And I've also talked about in my tweets on lower timeframes why I think we are likely to see a move on XRP, as depicted here, below these range lows at $1.80 before we're ready for that full-on reversal. So this is just a power of three schematic, accumulation, manipulation, distribution, whatever you want to call it, where we can identify a period of accumulation on an asset, a period of manipulation where price is forced down to trigger stop losses, and then a period of expansion or distribution to the upside. And so that's all this is here depicting. And so basically the argument is that I think that we're going to see a move below these range lows at $1.80. We could go as low as the green area of demand here, which is between 130 to 160. How low we go into that, or how deep we go into that, or whether we even test it at all is unknown, but the minimum target is the range lows, and then we should see a reversal back to the upside for the next leg to the upside. But the point here is that XRP is incredibly, incredibly strong, okay? And yes, it is correcting. And in the immediate short term, I think it's going to be a little bit weak as it moves down, about 20% to the downside. So we are expecting some weakness on XRP, but only around 20 to 30% of weakness, right? And then we're expecting strength again. Now, going back to the XRP Ethereum chart, it looks bearish. And what that implies, and what this chart implies, is that when this chart is rising, when price is rising on this chart, it implies that XRP is outperforming against Ethereum. When price is falling on this chart, it implies that Ethereum is actually outperforming against XRP. So when price goes up on the XRP Ethereum chart, XRP is performing better. When price is bleeding down, it means Ethereum is actually stronger. And so we're hitting now a point where we're at the range highs of this chart where we expect a pullback. We are also seeing bearish divergences here on the weekly time frame, and multiple bearish divergences. We call this like a triple bearish divergence, whatever you want to call it. When you get multiple bearish divergences, you continue to get price grinding up, making subsequent higher highs repeatedly, okay? But again and again and again, we see that RSI is making lower highs, okay? And not just once, not twice, but quite a few times here, okay? And so when we see that, it is again an indication of waning momentum. Momentum is waning as we push up into a logical take profit zone or a logical area of resistance, so a pullback is expected. And then when we go to lower time frames, you can see that we have a lot of built up untapped lows here. We have a little small range here that we broke out of. We're now rejecting. So if we fall back inside the range, we expect to move back down to the range lows, local area of demand. So this is my area of interest on the downside. That is a 35% move to the downside against Ethereum. Okay. Recall that XRP USD, we're expecting about a 35% move to the downside, or at 25 to 30%. And on XRP Ethereum, we're expecting about the same to the downside. And then we're expecting a reversal back to the upside. You can do the math by comparing the valuations of this chart with the actual individual pairings to come to logical places where XRP should be when it hits this zone in terms of dollars relative to Ethereum. But that gets a little bit complicated. I don't want to confuse you guys. The point that I want to make here, though, is that the strongest pairing, the strongest asset, I should say, in this space for the last few months is XRP. And this chart tells us that for the next probably few weeks, Ethereum is likely to outperform against XRP. What does that mean? Well, first it means that if Ethereum is going to continue to bleed, it should bleed less than XRP, right? So if we know that XRP will bleed a maximum of 25% in this case, right, then we know that Ethereum should bleed less than that. If this pairing is falling, it means XRP is underperforming Ethereum. So if XRP is going to continue to bleed to my downside targets, which again is a minimum of 16%, kind of a maximum of maybe 30%, then we know that Ethereum should bleed less than 16 to 30%. This is a little bit generalized, a little bit simplified, but I just want to get the point across, okay? If Ethereum is going to bleed less than 16 to 30% from where we are today, where does that put us? That puts us into this green zone at 16%, okay? And if we go lower than that, it puts us below the green zone. But this is the assumption that XRP Ethereum is going to fall because Ethereum and XRP are both pulling back at the same time. The other reason that this thing can fall is if XRP kind of gets stuck, unable to move higher because it's bleeding down to this zone, and Ethereum actually begins to move up, okay? So with Ethereum bouncing off support and pushing higher, and XRP unable to gain any ground here and just either stays the same or bleeds a little bit lower, that will also send this pairing down. So this pairing doesn't have to drop just because both the assets are both dropping, one faster than the other. It can also drop because XRP is stagnant and Ethereum is pumping. It can also drop because XRP is falling while Ethereum is pumping. It can also drop because XRP is falling while Ethereum is stagnant, okay? It doesn't only have to drop because both XRP and Ethereum are falling against the dollar. It can drop for many other reasons. And so we're expecting weakness here on XRP. We're expecting strength on Ethereum, and the XRP Ethereum chart corroborates this idea. Ethereum Bitcoin is on massive support with bullish divergences in the 3-day. Ethereum USD is on massive support, and XRP Ethereum is showing weakness. And XRP is the strongest asset, or has been in the space for the last few months. And so all these things combined from a technical perspective tell me that Ethereum is absolutely primed at current levels, that it is a fantastic risk reward buy at current levels, that as long as Bitcoin doesn't nuke below 70K, we should see a reversal here shortly. And this is at a point where sentiment on Ethereum is the absolute worst it's ever been, I would say, in the history of the coin, in a bull market, which we are in. And most are discounting Ethereum here and not seeing the narratives lining up with the stablecoin resurgence, the technicals lining up on multiple charts, and fundamentals frankly lining up, because I don't think the fundamentals for Ethereum are bad here, right? People think they're bad now because the price is down and they're trying to find reasons to explain why this is the case, when in reality, the reason is that Ethereum has been consolidating in a massive, what I believe to be accumulation range for the last 5 years. And within accumulation ranges, what do we see? We see choppy sideways price action that at times can be to the downside. And that's nothing to be negative about, right? But naturally, if you're not understanding TA, or you don't understand technicals, you don't understand why price would be moving down when an asset is bullish. We understand that that's a natural phenomenon of markets. They move up and down, and in ranges they go up and down, even if an asset is bullish, and it's just a form of consolidation, while the coins, Ethereum, transfers from those that are panic selling and those that think that it's dead to those like us that can understand these charts and are looking to buy. We're looking to accumulate in these zones. And that's what this price action is. It's accumulation going on, or you can even argue distribution, but distribution from smaller players or uninformed players, and accumulation into the hands of larger players that can see these types of things and that believe that this is a good risk reward area to be buying Ethereum. So that is it for this video, guys. I hope you guys enjoyed it. If you did, please like, share, and subscribe. Don't forget to enter into the competition giveaway that I have. Again, pinned tweet on my Twitter, and I will catch you guys in the next one.